Welcome back. You're watching Stockwatch with me, Simon Brown. Joining me to take the stock-related questions tonight, Ricus Reeders from PSG, Hole-in-One Ruimsig, and Combrick from Capicraft. Please be sure to send your questions. Email stockwatch@bdtv.co.za or SMS 41392 or an X using hashtag Stockwatch. Gents, evening. Thanks for joining us. I want to start off with some of the updates, and I want to start with telcos. Ricus, let's start with you. We had MTN today. We had Vodacom earlier in the week. I don't know, both looked quite bleak. Then we had Telkom today. That actually didn't look so bad. Is any of the Telkom space on the JSE, the telco space on the JSE, attractive at current levels?
Well, Telkom possibly because they were the worst of the bunch, but when you compare them with what MTN and Vodacom is doing, they, as you said, they didn't do too badly. But as a sector, not my favorite at the moment. I think it's the ongoing story with any telco. You have to do capital spend in order to stay ahead of the rest.
Yeah. So
cash flow is always a problem, specifically if things are not going all that well. And if you take a look at subscriber numbers in the mature markets that Vodacom is in, they're not going to get growth from there. And the African ventures, well, it really depends on what happens every 6 months, whether it be currency or legislation.
Yeah, there always seems to be some challenge. Drikus, telcos, I mean, they do have a constant capex driver. Any of them attractive to you?
No, I think they're over-regulated. That's the one problem. So it's a global phenomenon. So whenever these guys make too much money, you can have the regulator coming in, and we've seen that ICASA grew some teeth over the last few years. And if you make too much money in Nigeria, you've got all sorts of problems, it seems. So, obviously MTN has had its Africa woes. Maybe most of that is behind it, but there's a lot of ugly rumors surfacing about its involvement with Iran and illicit money flowing between, the government and Arancel, etc., on the Iranian government. So I think that will be hanging over the share price as well, even though, I don't think the share price discounts any cash flow from this region whatsoever. But with a different administration in the White House, you might see them tamping down again at friends. Let's call it friends of the Iranian Ayatollah government. So I'm staying away from telcos in general. Vodacom, it looks cheap enough. I won't stand in anybody's way, buying Vodacom. Telkom has always looked interesting from an asset-based perspective. It's trading at a fraction of book value, but still, you need to sell those, or you need to effect a takeover, which never seems to really happen.
Yeah, no, I take your point on that. Drikus, let's stay with you. Let's touch on gold. Everyone's asking about gold. The question is simple: buy, sell, or hold, or do we buy lower down? What's driving it lower? And is gold something you are currently looking at, or will look at cheaper levels?
So the short-term drivers for gold, or the short-term driver before the election, was obviously some kind of insurance for a very close election, a very, let's say, a contested election, for lack of a better word, and that there's no real clear winner, and that would have put the whole US political system in disarray. And so it made sense loading up some gold just before the election. I think a lot of that is unwound now, similar to 2016. Just after Trump won, the gold price plummeted 12% in the month thereafter, before it stabilized, and then the market realized, listen, this guy is going to cut taxes and deficits are coming back. And I just don't see Trump cutting the deficit, and debt to GDP at 130% in the US is not going to change on them. I think the guy has gotten, whoever took over, is actually receiving a bit of a hospital pass. Debt-wise, fiscal-wise, and I don't see him changing that. You need to unleash a massive productivity boom to get out of that scenario, and it's possible, but unlikely. So somewhere in your portfolio, you're getting a chance now to buy some gold if you don't own any as of yet.
Ricus, gold, is it in your portfolio? Would you add some more? I mean, it's weird because 10 years ago no one wanted gold, and now all of a sudden we all want a bit of gold.
Yeah, it's always the case, isn't it? And 10 years from now, it's going to be that barbaric metal again. Yeah, Mike, you've been in this market long enough as I have to have seen these cycles come and go. But at the moment, I mean, sort of medium term is still very positive. But as Drikus said, there's a bit of unwinding going on as uncertainty dissipates, and the dollar strength, I think, is one of the main short-term influences on the gold price itself. So just looking at technicals, looking at a graph, it can pull back the gold price it is a further 20% from where it is right now without endangering this positive momentum we've seen over the past year or so. So yeah, again, it's a trading thing, so I wouldn't be buying gold shares or gold right now. But if it falls back enough, and I can't see any reason why it shouldn't do it, as this dollar strength maintains, it will probably come back into a trader's buying area again.
And Ricus, let's stay with you. Gold or a gold share, or a bit of both? In which case, which is the preferred gold when the price is, the preferred miner when the price is right?
Yeah, I mean,
or something between.
Or in between? Ricus, let's go with you.
Yeah, right, yeah. I mean, so longer term gold, the metal tends to outperform the miners because obviously the miners go through these cycles and their costs are always there, whereas with gold you don't have a cost. But certainly when the gold price is going up, then you want gearing in the form of a gold mine, and you want hopefully a gold mine that's not on the edge of bankruptcy, but that's got amazing operational gearing. And there again, I'm thinking of something like Durban-Roodepoort, for example, you know, where a small gain in gold can influence the operational income you get because you are such a, you know, because your grades are so low, basically. And you can get a heck of an income coming in from it.
Drikus, gold miners, blend of both?
Yeah, sorry for interrupting, but I was going to say maybe some asset class in between, royalty companies that we don't really know on a Jazzy. There's a few on them offshore. So you can buy into a few royalty companies. We own a bit of that, you know, that's part of our exposure. We own bullion, and then we own some gold mining companies as well. And we own the basket of junior companies. So, you know, the majors will be producing a lot of cash. There's not a lot of resource finds last few years, last few decades. And the only way these guys can sustain or grow production is by buying some of the juniors. And so the juniors we've seen a few bids, you know, obviously, but I think there's a acquisition spree coming in the gold mining sector. So own a basket of some of the juniors somewhere in your portfolio.
And the royalty guys, I mean, as I understand, they've kind of got the land, they don't do anything, they just collect a check every, I don't know, 3, 6, 12 months.
Sure. So unfortunately, that price also, they're more sensitive to the yield curve. So if long-term yields spike, you know, that yield that they give you, attracts a high discount rate. So be cognizant of that. But I think it's good to have all three in your portfolio.
Drikus, let's stay with you. Question coming through. Why did Sasol drop today? Dropped yesterday as well. I suspect that's the carbon tax laws that were announced. Sasol down another just over 3% today, 93.51. Sub 100. Is Sasol attractive at last or not yet? Or not ever?
No, I actually missed that news flow. Thanks for that, Simon.
Yeah, so the government put up an update to the tariffs on carbon 2026, but at a higher rate than initially proposed. So that's the story, I suspect. Sasol, is it attractive? Is it never? Is it maybe lower down?
I think it's extremely attractive at these levels. It's difficult to hold on to it. I thought it was attractive at 150. That's 20 Rand lower plus. But they can sell the Louisiana, ethane plant tomorrow, the 50% JV to ThyssenKrupp. I think at somewhere between 50 and 80 Rand a share, Rand shares. So that's more than 60-70% of the share price, depending on what they get. and then you almost get the rest of the business for free. Obviously, there's still a lot of debt, but this is not a 2020 scenario where they've got way too much debt, dollar-denominated debt, and the oil price is trading at negative levels. This is not the same levels, and I do think the market is treating Sasol a bit harshly. I think a lot of people are just dumping indiscriminately, and if you've got some hair on your teeth, once again, position size is important, but at some stage, it's probable that Sasol will rip 50, if not 100 rand from these levels.
Yeah, and you'd remind whenever I purposely sort of delete that negative oil price because it just plays with my head. I can still consider. Ricus, let's come to you. Sasol, 93 rand.
I've been negative on it for a very, very, very long time, and basically I'm just following the graph at the moment. I mean, I know what Drikus is saying, and I agree with that. And at some stage, even a not very good operation will be valuable in the sense of that there might be a price rally in it. But I had 80 rand marked on my card since it broke 315. Let's see whether it gets there. If it gets there, let's see what happens. But at the moment, it's just watching rather than trying to be a magician and spot the bottom of this thing.
Now, I take your point on that. Ricus, let's stay with you. Sibanye-Stillwater question coming through around Sibanye-Stillwater. A couple of points here, some of them around volcanoes. We'll park that aside. But certainly the full EV, we seem to be going more hybrid. JP Morgan have been buying. Is there value in Sibanye-Stillwater? They got some gold, of course, and then PGMs.
Yeah, the gold held them. Good for them. But the recent rally in platinum shares was because of the proposal by the Biden administration that there should be a worldwide ban on the buying of palladium from Russia. Yeah. Obviously, with Trump in and his very good buddy Putin, that's not going to happen. So the excitement surrounding that news is gone. So we're back to where we were 3 or 4 weeks ago. The pure PGM count is basically going sideways, trying to find some kind of bottom, and no sign of an upturn there yet. So if I want to buy gold, I'll go and buy a gold producer or follow Drikus' suggestion of a mixture, but I'm not going to buy Sibanye just because it's got gold.
Drikus, Sibanye-Stillwater, there's a bit of gold there, but it is a PGM story, and the PGM story, I don't know, your take on Sibanye?
No, mostly PGM story, palladium. Stillwater in the US, obviously, well, what's considered the one stage the crown jewel in the company. But, I think most of the PGM rally that we saw recently was more to do with short covering. I think a lot of players were short in our local market, especially a lot of the hedge funds. I think that's done now, and we need to see some more, let's call it asset rationalization, maybe production cuts in the sector before I would really get bullish. But I do also think the demand side, a lot of the OEMs bought in a lot of stocks so they've got big stockpiles. After the Russia-Ukrainian war 2022, they bought at high prices, and they're working through that stockpile. Where that stockpile exactly is a guess. There's obviously a lot of figures floating around, but nobody really knows. And once that's done, they need to buy again because the demand for platinum is not going to go away. Fully electric vehicles. Is not here yet. We still need we still need a lot of development in the tech. So hybrids looks like the way to go medium term, and those still use a lot of PGMs. So I think at one stage you need to get bullish PGMs. I don't think we're there. So.
Yeah, I take your point. PGMs aren't over, but it might not be right now. So a bunch of questions around Boxer. First one, if you're holding Pick and Pay shares, will you get Boxer shares? Nope. You have to apply separately for the Boxer shares. Secondly, will Pick and Pay shareholders get the money from Boxer? Nope. That'll go to pay down the debt. So the 8 billion goes to debt, and you've got to apply separately via your broker. But Ricus, let's stay with you. Does Boxer interest you?
I think it's going to be overhyped. So first day of trading, if you're not one of the institutions that's going to get stock, or a decent amount of stock, I'm not sure if anybody's going to get a decent amount of stock. Even the larger players will think they got too little. First day of trading, it's going to be overhyped, and yeah, let's see where it trades. But I've seen this before. The market is hungry for a growth story, high quality growth story. And they're just going to slam a very high multiple at the open on this one, and I don't think we're going to get in at a fair price.
Yeah, and I think you're right. I think allocation is going to be absolutely tiny. Ricus, Boxer, does it excite? I'm remembering the good old-fashioned stagging of the 90s and early 2000s, but I don't think we're going to get enough script to do that. Would you be looking to buy either in IPO or on first day?
No, I avoid IPOs consistently because the minority of them actually work out sort of if you get in on the first day. So let the market find its level and find its allocations and find its volumes, and then take a look at it. And then, even then, it's a good operation, obviously. They're, how shall I put it, Boxer is sort of the middleweight or the middleweight champion in your lower spending, but it's going up against a heavyweight called Shoprite. They're going to be very good at that, and they might get it right, they might not. But let's get a bit of a track record, and let's get rid of the hype surrounding the IPO, as Drikus said.
Yeah, I take your point, and it's not a fair fight when you come up against Shoprite. Ricus, let's stay with you. Question came through: Absa or Standard Bank? Consider trimming Standard Bank and buying some Absa, similar business but a lower valuation. Your preferred bank in the South African space, and it's a much bigger space than it used to be if you throw Capitec in, and of course Investec and.
Yeah. Look, for stability and quality of operations, Standard Bank, and it reflects in the valuation, which is why Absa is lower valued. I mean, and it's purely systems and vision. So probably being a little bit more risk averse, I'm still sticking with Standard, actually first round. But yeah, Absa can, if they manage to get operationally really efficient, obviously they can gain quite a bit. And as you said, the other two, Capitec, Investec for their probably offshore assets, and Capitec, not really a bank, it's a platform.
Yeah, it absolutely is. Drikus, your preferred bank in our local market, or none of the above? I think we're frozen on Drikus. He seems to not be moving from our side. I think we've got a problem with the connection there. Ricus, I'm going to come back to you. A small cap, but I'll disclose up front. I hold some of it. Question coming through. Calgro's Ricus, you're back. No, lost him. Ricus, we'll stay with you. Calgro M3 charters looking good. You like charts. How much do you know about Calgro M3? I mean, they build houses. We need houses.
They build houses. We need houses. Terrible housing market. So. They've done surprisingly well in how they shifted the what they build and how they dispose of what they've built. Their funeral park section, part of the business, when that started, I thought it was a fabulous idea, and that seems to be doing well.
Yeah.
But just in general, because it is residential property, you're sitting with a very well-run company, I think, in a market that's not really exciting at the moment. But as you said, you can't argue against the price momentum on this thing. When compared to something like Baldwin, for example,
well,
I mean, it's chalk and cheese.
Drikus, I want to come back to you. Just before we lost you, we were talking about local banks. Any of them attractive to you?
I think Absa is just too cheap. Sitting at a below 6 forward price earnings ratio. It's just, I know I've been a lifelong AXA customer for my sins, but it's just too cheap at these levels. So if the economy really, looks better in 2025 locally, we've got lower interest rates, some credit take up, then I do see them doing well, and at least lifting that rating from a sub 6 to a sub 8 at least. That's 25% for you right there, if not more, plus a decent dividend.
Yeah, I was going to say, you get paid well to hold the banks while you wait for a re-rating. Drikus, let's stay with you. The question was around Calgro M3. I don't know if it's a stock you follow. Small little builder of properties. As Ricus mentioned, they've got the funeral side as well, the graves. I forget, they've got some fancy word for it. Your take on Calgro M3?
Yeah, it's still cheaper.
That's what I think.
It's still trading at about 55% of NAV. Doesn't need to trade at NAV. I do think they're much better operators than other players in the market. Obviously, not the same market segment that they're targeting than Baldwin for instance. But I do think that Calgro, after doing rights issues at one stage and almost, the company always going under, but even pre-COVID. I do think that it's been managed much better. We've got one of the founders back at the helm at the moment, and I do think they're going to just do some good capital allocation decisions that bought back a lot of shares when it really mattered at very low prices. Good capital allocation after a very tumultuous period for them, and it looks like they know what they're doing at the moment.
Yeah, and you're right. It almost went bust pre-pandemic. It wasn't even the pandemic.
Yeah.
That happened before the pandemic. What about staying with builders, and let's stay with you for a moment, Drikus. Robex, results out earlier in the week. Question coming through. It's pulled back from the high 50s. Is it now offering some opportunity? And there's not much construction left in our market, even less that sort of does much in South Africa, and it was good numbers.
Yeah, so I think, share prices have run quite a bit, especially after the elections. The market is expecting a bit of a SA Inc. or infrastructure story coming, but a lot of the work that Robex does is not really in the civil space, really. It was dominated. The civil space dominated the company, but they do a lot of other work at the moment, and with some of them was renewables, doing renewable plants, etc. And if Eskom really is in much better shape, how's that going to look going forward? And secondly, they need some. They also have a mining division basically, where they service the mines, and unfortunately we need overall with mining regulation. Nobody wants to sink new shafts in SA, unfortunately. Yeah. So I'm not too bullish at these prices. We own Avenge.
Okay, Avenge the pick. I need to go to stock picks because we're running out of time. Ricus, we'll get your take on Robex next time. Your stock pick, Sanlam, good looking update out today.
That's what I thought, and we've had such a tumultuous week in markets and what have you. I decided just to give myself a bit of peaceful sleep in the evening, and yeah, it was a rock steady, solid update from Sanlam. Every cylinder seems to be firing there. Asiapol merger seems to be going well. The Indian business, which is my area of interest as far as the future growth is concerned, that rollout seems to be going well. So there was absolutely nothing that I could find at fault in what they presented. It's not a 10-bagger or anything like that, but in tumultuous times, go for quality. And again, as always, I think it's going to break out to a new top. It's been going sideways now for about 3 or 4 months. Yeah, no, it's a sleep well at night. And I'd forgotten about that Asiapol deal, which of course just went through. And that was a good little business. They got at a really good price. Drikus, you're going the other way entirely, shorting S&P 500, put options or as the case may be.
No, everything is falling the last few days, except the dollar and in the S&P 500. Even the Russell, after spiking after the election, it's rolled over. The Russell 3000, the small to medium cap US shares that's starting to roll over. So purely technical, you see it hitting some resistance here, and all other stuff rolling over. It's just a matter of time. And it's cheap to buy puts at the moment. We just bought puts this morning, December expiration, and at the money puts, we're paying implied volatility of 11%, which is extremely low. No.
Yeah, no, that is a wow low level. We'll leave that there. That's all for tonight's Stock Watch. Thanks to our guests, Ricus Reeders, PSG Hole-in-One, Ruimsig. He's going with Sanlam after that trading update earlier today. Drikus Combrick from Capicraft, looking for puts on S&P 500, maybe even Russell 3000. Up next, the close. Stay tuned.